Welcome to Blue Chip Chats. My name is Gina DiGirolamo and I'm a certified financial planner. This is the series where we talk through the technical and emotional sides of financial planning to help you make informed decisions about your future. If you like our content, be sure to like and subscribe so you don't miss the next episode. Thanks so much for watching. Let's chat. All right, today I'm here with Emily Prater. Emily is a certified public accountant and a certified financial planner and financial advisor here at Blue Chip Partners. Emily, thank you for joining.
Thanks so much for having me, Gina. I'm excited to talk.
Absolutely. So we are going to be talking about strategies when it comes to charitable and philanthropic giving. So as a high level, if you could start, Emily, and just talk through, what someone might want to be thinking about, whether it's donating cash, writing a check, or some other types of planning strategies.
Okay, so like you said, a lot of times when people think about charitable giving, the first thing that comes to mind is, I'm going to write a check or make a donation online. And so I would advise anyone considering doing this to pause for a second, because there might be other strategies that are more tax efficient to where you can still accomplish gifting to the charity of your choice, but in a way that potentially reduces your income taxes for that year.
Got it. So, and one of the kind of key words that we're hearing, especially with our clients in retirement, is we're talking through a QCD. Could you just give a broad overview of what that is?
Absolutely. So a QCD is a qualified charitable distribution, which is a direct gift from a traditional IRA to a charity. And so whoever is the owner of this account is eligible when they turn 70 and a half to make this QCD. And one of the big benefits of QCDs is there is that direct, especially if you're in RMD age, you can reduce the amount of your RMD, help satisfy it through a QCD. And if you pull it forward, so taking them at 70 and a half, which is earlier than RMD age, you can reduce your future RMD burden as well.
Okay, so you mentioned the 70 and a half age limit on a QCD. Is there any restrictions to using that or anything else to keep in mind when it comes to QCDs?
So, great question. Yes. So it has to come from an IRA type account. So if you have a 401k or a different employer plan, you'd have to roll it over into an IRA before being eligible to make a QCD. And you can also make them from inherited IRAs, which is great if you want to gift from something that you inherited, but have to keep in mind that 70 and a half age limit still applies. So if you're younger than that, you can't make a QCD.
Okay. So outside of QCDs, what other strategies might you recommend for charitable giving?
So what I see oftentimes for clients who either have low balances in qualified accounts or are younger than the 70 and a half is donating highly appreciated stock. And so that can be great because not all of us, if we want to make a big charitable distribution, have that cash easily on hand. So people think, I have to sell some of my investments in order to generate cash. But if your investments have done really well over time, there can be a big tax burden. You might recognize a lot of gains by selling. So instead, you can just gift that stock or whatever other type of mutual fund, ETF, bond directly to the charity. And so the charity, once they receive it, can then sell it and there's no tax consequences for them. So it helps you avoid extra taxes by having to sell something, but can also, if it's a large concentrated position, help you reduce that risk in your portfolio as well.
Absolutely. The other key strategy that we want to talk through is a DAF. Mm-hmm. Could you share a little bit on that?
Yes. So a DAF, or a donor advised fund, is an account that you have with the charity that you can gift money to. And so technically, once you donate money into this fund, it's the property of the charity. So in that year of donation, you
can take advantage of a charitable deduction if you itemize. However, you still maintain control over how those funds are invested while they're in kind of your separate account that you have and when they're released to the charity. So having control over that timing allows folks to, if they want to really take advantage of maximizing their itemized deductions and getting a greater tax benefit, you can make several years worth of donations at one time and then release them over a period of years to the charity.
And we've been seeing this a lot now that the standard deduction is higher. For folks that might want to itemize, they may have to make a larger charitable donation in 1 year, but spread out that actual gift to the charity over a period of years.
Right, exactly, because now that the standard deduction for married couples is $30,000, that's a pretty high hurdle amount to get over with your charitable deductions, especially if your home may be paid off, and if you're capped at $10,000 for the state and local tax limit. $20,000 of a donation would pretty much get you even with the standard deduction. So
Sure.
you really need to donate as much as you can to maximize that tax benefit and take advantage of it.
Definitely. And for anyone thinking about making a charitable donation this year, what would you say is a key takeaway or something they should be thinking about?
I would say before you write a check, pause and consider the different options that you may have. First off, how old are you? Are you at least 70 and a half? Do you have qualified accounts that you could donate from? Are there large positions with significant gains in your portfolio that would make more sense for you to donate those versus cash? So I would advise, if you're not already working with someone, consult your advisor or an advisor and create a strategy that makes sense for you versus just, writing a check and maybe not thinking through all the different opportunities that there may be.
Absolutely. And just like you said, the key point here is having a plan, making sure that you're working with a trusted advisor to talk through the various strategies and see what you might be available to use and how it's most beneficial. So if you look to explore any of these options, please reach out to our team at Blue Chip. We'd be happy to help. And thank you so much for joining, Emily.
Thank you, Gina.
Yeah, and thanks for watching. Can't wait to chat again soon.